Hi guys, once again this is Alfred from binaryoptionstutor.com. I'm here today to talk about a little free strategy that we've shared on our site. We call it the drift shifter strategy. You can download this strategy for free at binaryoptionstutor.com. We got this idea as kind of an improvisation on a theme based on something we were some ideas we saw floating around a binary options forum. So, but the ideas were in Thinkorswim, and we converted some of that code over to MT4, and we took our own shot at actually putting together what we done was a simple wave-based retracement strategy. So this is going to be a quick 5-minute strategy, and of course there's a lot of ways you can use this template, but I'm going to go over the fundamental core strategy of looking for the retracements to the neutral line and taking some 5-minute positions. So let's jump right in. And I went into some detail on the PDF, but I want to touch on some things while we're here trading, looking at this on a chart, and also I want to touch on some updates that we done. So let's cover that first. You'll notice that some of these oscillations are now grayed out. We're calling this area our gray area, and what this is denoting is weakness in whatever that oscillation is. So this is an oscillation down, so there's some weakness here. Now there are several ways. Well, I'll give you two ways right now that you can trade these gray areas. One way, and the original reason for placing the gray areas in, is to avoid when what we perceive to be a ripple in the actual drift in the wave that the market's predominantly going to move in. What we avoiding when those ripples simply turn into a new phase shift or a drift shift in the market. If you start to see these gray areas, just get out of the market. Just there's no reason to speculate when you're seeing those show up inside of the pattern. Wait, wait, and get a more confirmed piece of data from your indicator. Now, the second way we can look at trading these is to look at them as range bound, which they are. This is kind of delineating that you're in a certain range based on what we've coded, and you can take advantage and try and exploit that range. Now, we've just seen an arrow here going down. We're obviously oscillating down, and this is the bottom of our channel. This red, this is the bottom of our channel. This yellow, this is neutral, the center of our channel. This green, this would be the top of our channel. Okay, we're oscillating down, but it's a weak trend, and we've hit the bottom, and we saw a bounce off. We're covering a little price action here, but price action, don't make it about PA versus price action. Let's just make it about using price action to be subjective, using the indicators to help us be objective, and using that synergy. We just saw a rejection of price at the channel right there. Price is coming back down to touch the channel again. There's an opportunity. If we're in a range bound market, there's an opportunity to go ahead and take your call. Now, this is contrary to the strategy, and this is a counter trend strategy. But in a range bound market, counter trend trading can be a little more rewarding. and a market that's not trading in a range, especially if you're trading spot, you don't know how long that trend is going to continue. So staying and remaining a part of that action can be more rewarding. That's all I'm saying there. Now, so you've got your two sides to that coin, which is just, okay, I see a gray area here. I'm looking for range bound trading. I'm looking for chop. I'm looking for indecision in the market. I just don't want to participate in an environment like that. Or perhaps you're someone who can counter trend trade. Okay, I'm looking for a strong moves all the way to the bottom of the channel. I'm looking for some confirmation at that bottom of the channel, and that confirmation came here with the rejection. Now we're touching that bottom of that channel again, and we're just going to play off of it and take our quick 5-minute call. I'm using the same template. I'm only using this template in a different way. Now let's continue with our drift shifter strategy. We're looking for 3 steps. Step 1, the start of the drift. This is the 0 line on our CCI oscillator. This is where we start the drift, above that 0 line. Step 2, we're looking for a confirmation by the moving average crossing, fast moving average crossing slow, as I've mentioned in previous videos. We got that confirmation there. Really, we see the arrow painting here because we would wait until the arrow would have actually painted here, but we're only going to you're going to see these arrows show up on the charts after the action has happened, and the arrow is going to stick here because the arrow would have already closed here. You could jump in on the start of that crossing there, but a moving average crossing, a fast moving average crossing, a slow, can very easily simply cross back in the opposite direction. And although we had some oscillations, it was we just had the oscillation up. So we're suggesting a little caution. Make sure that everything is closed, and there's not going to, repainting isn't an issue when you simply wait until the candle's closed. Now here, this arrow would have appeared at the first of the candle, and it would have stuck because we've already closed once with a candle with crossing of the 14 5 moving average over the 14 moving average, and that's all these candles represent. Now that's step 2. Step 1, oscillating up or down. In this instance it was up. That's the start of a drift. Step 2, confirmation of the drift, and that's confirmed with the moving average crossing denoted by this arrow. You're going to hear audio signals oscillating up. You're going to hear audio signal here, buy signal. Of course, you can get in on that candle. You can do a call next 5 minutes after that little ding and buy. Yes, you could have gotten out with a win if that's the way you want to trade this strategy. And sometimes why I mention this in the PDF is because at times when the trend becomes very dynamic, you're not going to get a retracement all the way back down to the neutral line, and it's a very strong wave pattern that you're seeing, and just the angle of price moving up, higher high, higher high, higher high. And if you're seeing that, higher low, higher low, higher low, you're not going to get that pullback back to the neutral line. So there's an argument for trading in that fashion. Also, maybe you can knock out 2, maybe 3 trades in this short span of time, and maybe you're done for the day. So that's all of that. Good arguments for that way. If that's your style of trading, if you get confident and comfortable trading high frequency like that, what I suggested was a little bit at the core, a little bit more softer style, which is just waiting for a retracement back to the neutral line. To those who love Fibonacci, this is just a 50% retracement because we've got a channel here which is denoted by 10 intervals. In this case, it's 5 minutes, and this neutral line here is at 50% of that channel. Now, let's go through some trades. First trade, we would have been in up cycle. That's our drift cycle. We see the market touch this neutral line. We do a call. That trade is a loss. Again, we're aware that we've just lost that trade. We're still in that up cycle. We do another call. That trade is a win. Okay, you've won one trade, you've lost one trade. Let me stop here and touch on a little idea that I talked about briefly in the book. This is just another improvisation on the theme. We're going to talk about money management just a little bit. If you've looked at the previous videos, I pretty much denoted 5% per trade is being a good place to cap your risk on one trading idea. Now, let's kind of remix that idea and let's leg into this strategy. On the very first touch of this neutral line, what if, for the sake of math and making it simple, let's say you're trading with $100. What's 5% of that $100? $5. Okay, what if you place $1 on that trade and you're tasting the market? Okay, now that trade was going to lose. Guess what? You still got $4 of your $5 left. Taste the market again. That trade won. Now you've only been right half the time, but yet you're profitable. You've tilted the broker's advantage on a 70% return a little bit more in your favor. You've gotten a little deeper, and that's all. That's all you've done. You could take that same 1-4 on a 5% and just apply that. And you know, if you've got a strategy, in that instance, even if the strategy can hold at 50%, it can be profitable. That's all I'm saying about that. And actually, this isn't a video about money management. Now, there's another instance. We touch that neutral line. Oscillation still up. We're still in a drift cycle up. Been confirmed by that move across there. So we're still drifting up. This cross represented nothing but this 14 moving average and this 5 moving average moving ahead of it, and it's still the case. So we're still in that up cycle. We're going to take another call. That's tight, but we'll call it a win. Depending on your broker, but we'll call it a win. Okay, here's another opportunity. We never even touched the neutral cycle, the neutral center, I mean, of this price channel. However, here we touched the bottom. Now there's an opportunity for you to stay out of the market at this point, because we've got a very, very weak oscillation here, and there's a possibility that we may just cross over and totally start a new drift shift. So you could pause there, because part of trading sometimes is waiting for the clues in the market. So you could pause there. Maybe you're more aggressive and you're going to say, look, I'm at the bottom of this channel. I've seen rejection at the channel before. I'm going to go ahead and do another call here. That, in spite of the fact that this is a down candle, you'd have still probably made it out with some with a win there. And here's, in my mind, a better place. All of this area here, I don't really like this area because the candles are very small. Yeah, we're oscillating above, but all of these are closing pretty low. This is a healthy oscillation above the zero line here, but looking at price action, because we're trying to merge both of these, price action as well as the indicator. Got a wick here, a substantial wick at the top there, so we kind of got to knock out this here, and there goes a nice little southern term, this here oscillation to the upside. We're seeing all of this tight action here. Not something I'm interested in trading. I mentioned that in a PDF. All you can assume when you're seeing this low volatility and these tight candle closes is that that's going to continue, at least near term, and that's something that can affect your win-loss rate, even if the market does move in the direction that you're speculating on, because it's not enough of a move and it may not register on your particular broker's platform in your favor. So this is a healthier place here. That's why I placed this arrow, and we're going to go ahead, take that touch of the neutral line, and we've got a healthy move to the upside. We were doing a call. Red vertical line here. What's this all about? 2 hours, roughly 2 hours of trading from there to there, where wins versus losses, we're doing a hell of a job. Part of trading is also, don't give it all back. Don't stick around long enough for the market to turn on you. Instead, take what the market's giving you, walk away, and come back to trade another day. It's very hard to break yourself conceptually if you're going to move from a business model where you're working for yourself, be it trading, be it in music, be it in sports, etc. You've got to move yourself from the model of hourly wage, or conceptually, I get paid for doing something. With music or software development, or these are things that we've been involved in. Sometimes there's residual payment. You're not going to be necessarily doing anything, but someone new is discovering work that you've done prior. Maybe a song that you've already written, a composition that you've already participated in, is being used in a new commercial, perhaps, and you're going to receive some type of benefit, residual benefit from that. Trading is not about getting paid by the hour. You don't have to work 8 hours, 2 hours, denoted right here. You've got your wins on the day. It's an opportunity to leave before the market has the opportunity to turn on you. Conceptually, you're getting yourself out of the practice of, I get paid by the hour, I get paid for doing something. With trading, sometimes you get paid just for waiting for the right opportunity to capitalize. Okay, I'm off that rant, and you can make the argument, are you trading? Binary options isn't trading. I'm ready for somebody to make that argument. Okay, speculating. You've got to capture the right opportunity. Now, here's some anomalous behavior, and what I mean by that is, an anomaly is something that happens, but you're not necessarily expecting it to happen. We've got a arrow right here as our moving average has crossed, and that's a down cycle. But wait, our oscillations, that they may have been going back and forth, but that one closed perfectly neutral, and this one closed, it's saying up. Okay, what do we do here? Nothing. Again, we're back to that subject of trading, on sometimes being a game of waiting. Okay, there goes our first candle. It's closing significantly down. After those three candles closing up, this is down below the neutral line. But we're still not in a drift cycle that would denote down. Until this candle closes and we see that oscillation down there. Now we are in a downward drift cycle, but we've got our shades of gray here. What's this telling us? Wait a little more, because we're in a particular range that we've marked off, and there's still a possibility of, there's more of a possibility of a rebound in the market. So let's just wait another candle, get a little more confirmation. Okay, now this candle here, this candle closed with a strong, and somewhere in this candle we would have already started to see a strong drift on the CCI down, and back here we've already crossed down back here, so it's an opportunity, it's a safer place, and this is also one of those kind of, if you're going to be a high frequency speculator, there's strong momentum right there. One, two, three candles. You see, there's momentum, and somewhere in this third candle, you start to see some strong momentum. And if you're just going to ride this very powerful momentum going down, then those are some opportunities to do some puts. That's not the core strategy, however. The core strategy is to wait for a retracement to our neutral line, all the way over to the other side of the channel. Now, strong indication here that we're seeing strong drift oscillation down. Price actions just telling us the same thing. One thing that's showing up here with these deviation levels is tracked by CCI, and that's the reason I like this strategy, because again, there's a consternation between the moving averages are slow and the price is all that matters, etc., etc. Well, this CCI is using the linear deviation, and so you're going to have that current price, or looking at things conceptually based on distance, and the cross over here is just a moving average cross. So looking at things, if you're in that camp that looks at momentum in the market, or movement, or wave oscillations, so you've got both sides of that coin in one strategy. One side looking at rate of change based on the time, 5 intervals over 14, or based on the movement of price over deviation levels. So that's, if you don't understand that, if that was jargon, put it on the shelf. You all you have to understand is here's the wave here, and that wave was drifting down. Although we do see that this oscillation down is getting smaller and smaller and smaller, all that's indicating is the same thing that the chart's indicating, because these candles down were getting smaller and smaller and consolidating as well. That's because this is based on price, and this is just another compression of price data. That's all I was saying with that. two different ways of displaying the same data. Data is fed into this software via the ticks on in price from the broker's feed. That's all. And we're finally oscillating up. Step one, cross here. Step two, wait. We need a pullback. Didn't quite make it to the neutral line. I'm pointing out some improvisations here because I gave a very strict linear set of rules in the PDF and on the site, but you can see here that we are touching, at least we're about touching the slow moving average, that 14. Could have took a call there. That's fine. Okay, we're about touching again, and you're almost touching this the neutral line is denoted in our PDF. You could have took a call there, but what's calling us out of this? We are in this gray area. That's why we put this gray area again, because some of trading is sometimes waiting. Yes, there was a trade there to the upside, all these candles, but 1, 2, 3, 4, 5. And how far have we traveled? Not very far at all. It's the candles might appear dynamic, but they're not very dynamic because there's not a lot of volatility. And when this gray area started here, you could have known that you were in that range. And if you can be disciplined and patient, because you're not getting paid by the hour, you're trading. Wait for an opportunity where perhaps the market would be in a better situation for you, or take the position. Okay, this is maybe it's a range bound area. I'm gonna look for pullbacks on these candles, and I'm just gonna see if I can pop out some quick calls. If you're more familiar with PA, this candle here, this little doji is kind of like a shooting star pattern. That might call you out, and you might say okay, and you might be able to stop there. But when I make these videos, I'm mostly dealing or speaking with people who are younger and not as familiar with these patterns, because their trading journey is starting, and so they may not know that there was a shooting star right there. They may have not recognized this doji denoting that rumble in the jungle between the bulls and the bears. So this dance might be steadily coming to a close. That's why there's this gray area here. So just avoid it altogether. And we've got a little oscillation here going down. The step 1, 2. We've got that confirmation with the crossing there. We've got a touch here all the way on the other side. It's going down. But what do we need for step 3? We need a move all the way back to the neutral line. Okay, what's happening here? We got a gray area. Gray area. The second this candle started, it would have been gray area. So what are we going to do? We're going to wait. If you would have got in at that neutral line there, what would happen on that next candle? Market continues on, because it wasn't a ripple, it was a new start of a new drift. It's also confirmed by the candle closing. This candle closed, and now we're oscillating to the upside. This is what gives some people finicky with indicators, but they don't understand that price action is just saying the same thing. In my opinion, they don't understand that, because I can't speak for what everyone understands, or why someone is particularly upset about one particular thing. But You don't have to be. Breathe easy. Price action, down, down, down. Cautionary candle right here. That compression, that's a stopping pattern. You love VSA, that's a stopping pattern. You love price action, that's a spinning top, that's a stopping pattern. Same thing. You love the indicators, that's why we put the gray area in. There's a stopping pattern. Again, just take a time for pause. And look, you're rewarded because there's oscillation up, step one. But again, we're still in a gray area. Let's wait a little while for some more confirmation. The arrow would have started showing on this candle, but that candle has to close. Therefore, the arrow really shows and is confirmed right here. Now everything is showing you is being in a up cycle. That's the drift shift that you're in. So we're waiting for a retracement down to the neutral line. Could have got in there. There's a winning call. But again, I'm just going to totally avoid these areas here, these gray areas. There's not a law that says you have to. Depends on your comfort zone. There's another opportunity. Nice move up. I'd feel better about trading as I start to see a stronger area there. And that's all. We see the market continue painting a picture of us just slowly pushing up. And that's the drift cycle, guys. That's all we're doing. We're basically wave trading, putting some PA, which is just putting PA using these channels and putting price action together with these simple indicators. Someone also asked about multiple time frames. We plugged in on this latest update. We put the gray areas in, and we also put in multiple time frames. I'm going to caution you, there are some ways of looking at the longer time frames, and I'm going to talk about some of this right now. And this is my opinion based on using these indicators. And I'm not opposed to using indicators, okay? So how you use it is what's going to be important, not the indicator. Not a bigger time frame is just going to make my trading more accurate or etc. I know this is going to make my bet more sure. That's in my opinion, that's not a way that's not any more a surety, because you're only making the point of reference is a 5-minute speculative bet, because you're looking at an oscillation on a larger time frame doesn't necessarily mean that you're going to end up with a stronger bet, because that time frame is out of phase with the time frame that you're on the 5-minute chart. But we've added it because there are some uses of different concepts of looking at the larger time frames. Here's some things that I like if you can caution yourself out of looking for the sure shot. Right here we're on a 5-minute chart. Let's go over here. We've got 5-minute chart. We're in a oscillation down. We don't have the arrows on this chart because I'm just looking at the CCI. Okay. 15-minute. We're oscillating down. So if we're on a 5-minute chart and we drill up or set our CCI to 15-minute, then we can then be aware that we've got both the 5 and 15-minute showing us momentum to the downside. So that strength and momentum can be helpful, and we're not too terribly out of the phase. Okay, here 30-minute chart, we are oscillating down, but we're starting to see some gray areas here. So if we were taking a longer position, that's kind of cautionary. Here, yeah, here we're on an hourly chart. Now we've got a gray area here on this hourly chart. And again, that's, you see, that's kind of, we're way out of the sync from what we would have saw on a 5-minute chart, simply because we're not, each of these candles is no longer 5 minutes of compressed data. It's 12 times 5 minutes of compressed data. And it's kind of like if you're running a tape, you've got half-inch tape, when there used to be tape before everything was digital so far as recording. You had half-inch tape and it's running at 16 inches per second, or you've got 2-inch wide tape and it's running at 30 inches per second. Okay, so you've got just totally the width or the time frame of these candles and the speed, everything would be out of sync. So there's the better use, and this is just my opinion, of multiple time frames is to look at the multiple time frames and is harmony, searching for harmony over a multitude of different time frames, and that strength and that momentum. But when you go too far out, if the concept is to be looking for a surer bet based on the fact that longer time frames are telling you this, what's happening on a 1 hour chart is not of as much importance if you're only going to be involved in speculating at the 5-minute mark. But if we're looking for more of a aggressive strength, like maybe you're trading the impulsive moves, it's a good idea to use the multiple time frames and engage in interpretation on the 5-minute, the 15-minute, the 30-minute, all of those charts. Probably better for you if there's the same strong pattern showing up. So that's why we added that to the latest updates to Drift Shifter. And that's basically it. That's what Drift Shifter is all about. Just catching a wave in the markets, finding that wave, and continuing or getting a pullback to some neutral position all the way down to totally against that wave, and then taking that ride as the wave continues and that ripple that you just got in on gets washed out of the markets. Another little idea before I close this video is perhaps moving your CCI up just one time frame, maybe to 15 minutes rather than 5, and instead of trading the neutral line, trade the whole other side of the channel. Just another improvisation on a theme. There's lots of ways. Strategies aren't going to win or lose you money. Your ability to trade a strategy consistently, your ability to avoid psychological issues because of losses, and that's why I went into scaling into a trade earlier when I started this video. That would have been 2 losses or 1 loss, 1 win, and you would have still been profitable. And no matter what, that's going to be easier to handle psychologically. Or you could have just flat bet and took a $5 loss, and then okay, the next bet you've won, that's $5, so you're up $3.50, let's say on a 70% return, and you're still down $1.50. There goes the advantage of not having a perfect one-to-one trade on a EU based broker. It's just simple math. Oh, it's just math. I'm not gonna say it's simple. If it doesn't make sense, rewind the video. Just rewind the video and listen again. You're only getting 70% return versus 100%. When I first started, uh, I was on a different site. These weren't called binary options, and the trades were 1 to 1. That's not the case now. So, no big deal. We talked about an idea of how to play around it earlier. That's all we have to share today, guys. I hope you will download our latest version of this product. I would say stay out of the gray areas if you're very new to using this strategy. Stay out of the gray areas. Avoid them. Part of making money speculating is not just the actual speculation, but waiting on the opportunity. See you guys in the next video. This is Alfred from Binary Options Tutor. I'll drop a link to this free strategy down in the description. You guys have lots of fun. Wishing you lots of profits trading on the markets.